My talk tonight is very much about the apartment market. Reason being, it's probably the most affordable for most Kiwis, and we're talking about here about getting into your first home. Just out of your reference, a point of reference is that a lot of people think you need a 20% deposit to buy your first home. Totally incorrect. Our doors are open for people with a 5% deposit to buy an existing home or an apartment at 10%. Now, there are some parameters around size of the apartment, and I suppose that's where I was talking about this 27 square metres. True story. I was out playing golf, which some of my colleagues know I'm not that great at, down at Amokaroa. And I had a phone call. Thankfully, it took me off my worst shot I was playing. And this customer rang up, or lady rang up, and she said to me, I want to buy a 27 square metre apartment. I don't even think my cat would be happy to live in a 27 metre square apartment. I suppose the question I always say to people is, how long could you live in a 27 square metre apartment before you go stir crazy? And that's probably, as I said to this lady here, she's struggling to find finance. But the apartment market is certainly, we've seen huge growth in that area. What has allowed people to buy property in general is the KiwiSaver. If you think what happened before KiwiSaver, we had to save money, we had to put money away in our bank account, then suddenly there'd be this lovely trip going to Fiji, and I think, oh, I might go and use some of my savings and go on a nice holiday. KiwiSaver has opened up the door to so many Kiwis now that before KiwiSaver came along, could not buy a property. Now, with the forced saving that you already have in terms that your employer is almost doubling your money, the government's giving you a kickstart of $1,000. They give you a tax rebate of $520 a year, plus any earnings you get out of that money. You cannot touch it. You cannot touch it for that holiday. And it is a great way of saving money. And the return on it, if you take into account what the employer is giving, is a very, very good return. After 3 years, you can draw that money out. It can be used for two things, buying your home or for your retirement. And for most of us here, it is to, not for myself, but it's for most people to buy your first home. Secondly, with the KiwiSaver, you may also qualify for the government's Home Loan Start Grant. Now that's, depending on how many years you've been in KiwiSaver, you can get an additional $10,000 per individual. So for a couple, there's an extra $20,000 that you could get for the government as a kickstart for your home loan, or for buying your home. One thing we do say is that you really need to have some savings yourself though, so we don't purely rely on that KiwiSaver, the Home Start Grant. You need to have at least 5% of your own hard-earned money. So what I want to talk about is just the process about what we look at when you come to the bank about buying a home, and just go through what we'd be looking to look at, how we do our calculations, and talk about interest rates and perhaps loan structures. Going back to the apartments, if we look at central Auckland, going back to the many years, as I said, 19 years in the finance industry, apartments were very much central Auckland based. Cranes were going up everywhere. We saw the apartments really in that central area, around Nelson Street, around Anzac Ave, apartments down in the viaduct, which are quite expensive. We are now seeing apartments, of course, popping up all around the suburbs. North Shore, West Auckland, South Auckland, East Auckland. Myself, I live in East Auckland. Stonefield's prime example. As the land is becoming scarce within Auckland, and most of us desire to live where we grew up, where our family are, where our children might be, apartment is an ideal way of still living close to where you work, and also due to, as Tony mentioned, the double income now is required for most people to service a loan. So we're seeing mum and dad, or husband and wife, de facto relationships, both working. You don't want to come home to cutting the lawns, cutting the hedge, painting the house. People are so busy these days, and that's where the apartment market is ideal. You do have some costs related to an apartment, the body corporate, but overall it is generally a very good investment for an investor because of the rental return, or for the home owner occupier. Little things you've got to worry about, you don't know who your neighbours are. You're in a high-rise apartment, and those sort of things can be of a concern. Also, location is very important, and I think everybody talks about location, 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 buy the worst house in the best street. We can't always afford that worst house in the best street now, but it's something to think about. Is that my time? A survey of first home buyers showed that 40% of first home buyers were now looking at buying outside of Auckland as an investment. And I suppose it's the affordability around being able to generate rent from that property. Outside of Auckland, cheaper areas, Hamilton, which has increased, Tauranga gone, Huntly, Tokoroa, Tikawata, there's a lot of property out there where you do not need to necessarily buy within Auckland. And as we've all been saying, all of us have mentioned the property ladder, getting onto the property ladder. So I don't know if you're part of the 40%, but buying a property, renting it out to help pay the mortgage while you're living at home with mum and dad, as I have got one of my sons returned from London. So living with mum and dad is the cheapest, or you go boarding. But that is a way of getting to the property market because of what's happened within the Auckland area, which has just become very expensive. Things to look out for, just some points to look out for. As I said, the 27 square metres, how long could you live in that for? Location, extremely important. The other thing is also just allow for the fact that you are going to have some additional costs of owning an apartment, which is the body corporate costs, but also when you own a home, you've got rates. So the body corporate sort of balances out a wee bit. The location area is extremely important. And as we see the Auckland spread, Auckland CBD, it's not for everybody. And please make sure that if you do buy a property, that you are able to stay in that property for an extended period of time. Our lifestyle, our life, our life changes in terms of children come along. And certainly an apartment may not be desirable once you are having children. What you can actually do then is either leverage off the equity of that property, keep it as an investment. They're a fantastic rental return for a reasonably low price. Leverage off that property, the equity in it, then to move on to your second property, buying a home, which I think is most people's desire, is to have the home with a white picket fence, the trees, the cutting the lawns, doing the paintwork, cutting the hedge, all those things that we don't really want to do. But certainly that is what we as Kiwis like to do.